Good evening traders. In this video, we are going to discuss about how smart money played their game today and how they are actually positioned themselves in the market today. And before going to the video, I am not a SEBI registered analyst, and whatever the information I shared in this video is only for education purpose. And before taking any trades, consult your financial advisor. Okay traders, today actually Nifty closed 86 points negative. So it may be a very small percentage, but the intraday move was very huge, guys. The price actually made 315 points move, nearly 1.28% move. So it is a huge move. Normally Nifty will not move 300 points in intraday bias, no. So it is a huge move. What is the reason? So yesterday evening Trump applied 25% tariff to all the products exported to USA. That is why the market got panic, and today it opened around 200 points gap down. But due to monthly expiry, the gap down did not sustain and it rallied towards actually it is rallied above the previous day high range. Okay, and coming to Nifty 50 stocks, most of the stocks closed in red, and majority of the stocks closed in flat plus or minus 1%, and very few stocks like 6 or 7 stocks only closed in positive bias. The overall Nifty 500 is worse than normal Nifty 50 companies. Here if you see, most of the stocks in red or in grey, so they didn't move much or they closed in red. Only few stocks are closed in green in Nifty 500. So the larger market witnessed more selling pressure than Nifty 50 stocks. So this is how the day ends, and Nifty closed around 86 points negative. So now we will go to intraday. So here you see this 24,600 is a 15 minutes liquidity on the downside, and in the upside 24,900 and followed by 945, 993 are the main intraday liquidity zones. So when price travels or moves inside this range, we will not see any good moves. But this move happened today, but we can't predict this move actually, guys, because whenever there is a liquidity, we can say that the price is going to reverse from the liquidity or it is going to break. We can see a good move, but within this liquidity range, it can behave whatever it likes. It may be consolidate or it may break the range also. It may do whatever it want to do, and it may go all over the places also. So we cannot accurately predict the price action without the liquidity. So when price crossed this 24,900 level, we have witnessed a huge selling pressure. Actually this 15 minutes liquidity was swept and it was reversed from this level. I think from the high it has fallen above about 150 points. And today morning when it opens, it actually exactly opened around this fair value gap. You see, this is the bullish fair value gap formed in yesterday's price action, and it was opened exactly there and formed a good rejection candle. This rejection candle itself is a good sign of bullishness. So until this low got broken, we should be bullish for the day, because it is reversing from the one important fair value gap level, because it has good order block with it. It has a fair value gap, and also it significantly moved the price to the upside direction. So it is not yesterday's fair value gap, it is day before yesterday's fair value gap. The fair value gap the formed is on 29th, not 30th yesterday. It was day before yesterday's fair value gap. It opened there and rallied to sweep the liquidity present at this 15 minutes, and it fell from here. So this is what exactly happened in today's price action. So if you see, whenever the smart money come into the market, it will always form the fair value gap. If fair value gap was formed, we can confirm and ensure that the smart money has arrived to the market. You see, this is a good fair value gap happened today. So this downside move doesn't come to this fair value gap. So price doesn't respect this fair value gap. So without even respecting the fair value gap, the price moved significantly from 700 to 950 levels, 250 points move. It is a pure manipulative move, because whenever smart money enters into the market, it not only makes the fair value gap and also respect the fair value gap and reverse from the fair value gap, and then only it can move into the respective direction. But without respecting the fair value gap, if it moves, means it is a manipulative move. So this is how we can evaluate whether the smart money is deployed to the capital or retail traders are deployed to the capital, or the move is manipulative. So whenever the price does not respect the fair value gap and moving in a particular direction, it is a pure manipulative move, guys. So if it moves like that, we can always expect a reversal from the liquidity levels. That is what exactly happened today. Hope this logic and explanation fits you well. If you have any doubts regarding this concept, you can always comment on the comment section. I will try to clarify in the next video. So now we will come to 1 hour time frame. You see, in 1 hour, so these are all the 15 minutes liquidity. In 1 hour, we have a good fair value gap. So as I said earlier, whenever the smart money deployed the capital, not only the fair value gap should form, it also respect this fair value gap and reverse from this fair value gap. So this fair value gap is a place where smart money average their already taken position. So this is when the smart money taken the original position, and then market moved significantly from there, and again this is where in this rejection candle only they are averaged their position to move the market in the downside. So if this move doesn't happen, means if the price fall further, it may not reverse from this level, it may break this level also, and it may be a manipulative move. But now the smart money is playing the game very carefully and very beautifully. Within the naked eye itself, we can see that the smart money has deployed the capital to move the market downside. That's why without touching this liquidity, price significantly retraced to reverse from this fair value gap. So this is how smart money actually works. And if the price reverse from this level, the next stop for the price is here, 24,470. So this is where the weekly time frame liquidity is present. So we can expect the price to fall to this level. So I thought yesterday's gift Nifty's price action indicated a gap down. So today itself I thought it will reach here, but it doesn't happen today. Maybe it may happen tomorrow. Let's see, maybe tomorrow or Monday. I think within Tuesday it may reach these levels. Let's see. So now we will go to daily time frame. You see, the same logic applies here also. So this is where smart money formed the fair value gap. So before itself you can see, this is where smart money formed the fair value gap, and again it went to this fair value gap and then reversed. So on the reversal, it formed a fair value gap. So this is now the time for the price to respect this fair value gap and reverse, and that is what exactly happened. Now this fair value gap also respected in daily time frame. So in all the time frames, in 15 minutes the liquidity was swept. In 1 hour time frame, price reversed from fair value gap. In daily time frame also, price reversed from fair value gap. All suggest that we can witness a good downside trend in the upcoming sessions. So this is what we are seeing in the naked eye in the chart. So if you know exactly how to analyze the chart and how to view the price action formed by smart money, the trading decision will be very easy, guys. So if you see in weekly time frame also, we have seen a good fair value gap present at 25,257 to 25,331. So logically, if you see, the price will become only bullish in 1 hour time frame after crossing 25,251. So 251 is the exact liquidity area for the 1 hour time frame. If it crosses there, we have weekly time frame fair value gap present at 257, only 6 points gap. So until price crosses the 25,231, we cannot be bullish in the market. So at least in 1 hour time frame, price needs to cross this 25,331 levels. So if the price reverses here itself, and if it moves to 25,257, definitely it will fall from here. But if it collects the liquidity here, the liquidity presence in the wick, 24,470 levels, and then if it reverses, it has the potential to cross this fair value gap, because always liquidity has more power to cross the and surpass the fair value gaps. That is the main logic of smart money concept, and we will see how the price action plays in Nifty. Hope I explained the concept to you in an understandable way. So next we will come to Bitcoin's price action. It is consolidating, guys, and it is forming a bullish flag pattern. This is the pole and this is the flag. So whenever this flag got breakout on the upside or downside, we can witness a good trending move in Bitcoin. Till we could not say that the price is going to go up or not. So most likely the bullish flag patterns will break out on the upside, but this consolidation lacks momentum, guys. So we need to wait till any of these levels to break to get the confirmation. Until there will be no trading opportunities in Bitcoin. So this is all about today's price action in Nifty as well as in Bitcoin. And if you like this video, subscribe to this channel and comment on this video if you have any clarifications, and we will discuss the remaining things and the remaining price action in that tomorrow's evening video. Thank you.